Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Ahlan bikum. Inshallah, today I will present about the topic usury in personal loans in the banking sector, a case study in Bank BSN. So let's see. So this is basically our contents that include our introduction and our body content and of course the conclusion. So next, before I start, I will introduce myself first. My name is Nurul Samihah Binti Razak and my matric number is 2216638, and others which are my team members, which is Sister Waheeda and Sister Auni. So we will present based on our parts. Okay, next, first of all, I will talk about the introduction of this presentation, and basically, what is the introduction of this present is about the usury, and usury is an increase in value, whether in a transaction or loan. So other than that, usury also known as a riba in Islamic terms, and as we know, usury or riba is a bad action for Muslims, and it is forbidden to do it in Islam because how we obtain it, it is obtained in an unfair ways. Usury also actually has existed since pre-Islamic era, where the Arab society practiced this usury. And other than that, this presentation will conclude the banking service, which is BSN banking, and BSN banking provide dual banking system, which is conventional banking and Islamic banking. And since the beginning of Islam, usury has been prohibited, as Allah states in Surah Al-Baqarah, verse 275, which is Allah has allowed buying and selling but prohibited usury. Then I will talk about the concept usury in Islamic law. So the slides before, I've mentioned that usury is an increase in a value, whether in a transaction or loan. In this concept of usury in Islamic law, in the Mazhab Shafi'i, usury is defined as a transaction with a certain reward that is known to be equal in a quantity or time when the transaction occurs with a delay in the delivery of the two good exchange or one of them. So basically, the usury in Islamic law, as have I mentioned before, it is prohibited, and the prohibition of usury has strong evidence from authentic sources, which is from Al-Quran and also As-Sunnah. For example, in Surah Al-Imran, verse 130, all believers do not consume interest, multiplying it many times over. And also in Hadith, the Prophet Muhammad SAW said, every loan that attracts a benefit is riba. So it is prohibited that the concept of usury in our life as a Muslim. So we're moving on the next slide, which is Bank BSN dual banking system, which is conventional banking and Islamic banking. So BSN in conventional banking, actually it is offers current and saving accounts, credit facilities and loans as part of its traditional banking operations. So the foundations of this service is conventional banking, which with charges interest on loans and pays it on deposits. So the interest rates and repayment terms are set competitively to ensure that borrowing is both accessible and affordable for a broad range customers. So conventional banking practice or applied usury or interest, or we call it as riba, in this banking or in a transaction or loans. So the next part, which is BSN, is Islamic banking. The Islamic banking system at BSN is designed to provide ethical financial solutions that avoid interest, yakni riba, gambling, yakni maisir, and uncertainty, yakni gharar. So BSN offers Islamic loans and other facilities that comply with Sharia principles, and it is and the BSN operations are built on the foundation of fairness, transparency, and social responsibility, aiming to promote economic justice towards the community and social welfare in accordance with the value of Islam. And of course, Islamic banking, it is practiced financial banking that is avoid interest or riba in their transaction or loans, and it is a fairness financial because it is applied the Sharia principle in it.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. My name is Nurul binti Rahman and my number matric is 2214532. And now I will proceed the presentation with explaining the structure and impact of interest-based conventional personal loans. So basically, interest-based conventional personal loans are structured to provide financial access through fixed interest rates, eligibility requirements, and defined loan tenures. The idea relies on interest rates, ethical and practical concern, particularly in comparison to Islamic financial principle. So let's look at the first structure. The first is fixed interest rate. So interest is charged consistently throughout the loan terms, raising concern about fairness and usually compared to Islamic financing. Furthermore, eligibility criteria, appliance must meet age, income, employment, and account requirements to qualify for loans. And the last structure is loan amount and tenure. Loans have predefined amount and repayment term structure to ensure affordability and compliance with bank policy. So if there have structure, it's come to impact. So let's look at the impact. The first one is financial inclusion and ethical concern. So basically, loans improve financial access but conflict with Islamic principle prohibiting interest raising ethical question. Furthermore, contribution to non-performing loans, as we know as NPLs, high interest rates lead to repayment challenges, increasing default and financial strain. And the last one is economic accessibility versus usury. While providing credits, this loan can burden borrowers with excessive repayment obligation, causing financial hardship. So, while these loans enhance financial inclusion and provide credit access, they also pose ethical dilemmas, contribute to financial strain through high interest rates, and risk perpetuating debt cycle, highlighting the need for fairer and more sustainability leading practices. Alright, let's look at the next slide. The next slide is focusing on Islamic financial and ethical principle. So basically, BSN offers Sharia compliance financial services adhering to the principle of Islamic banking as outlined by Sharia law. This includes the prohibition of riba, gharar, and maisir. That my friend will explain more about it. In its product and services. BSN provides ethical financial products that ensure investment aligned with Islamic principle, avoiding sectors like gambling and others. So let's look at the first one is prohibition of riba. BSN replaces interest with profit sharing mechanism where profit from deposit accounts are shared with customer in the form of dividends or grant. The second one is ethical investment. BSN ensure that Financial activity focus on ethical investments, aligning with social responsibility and on the support sector that benefits society and the environment. The last one is alignment with SDG. This means Sustainable Development Goals. BSN Islamic banking services contribute to global sustainable development goals by promoting economic inclusion, poverty reduction, and supporting environmental responsibility initiatives such as microfinance and investment in green projects. There's a lot of differences between interest-based and profit-sharing models, so I will share with you the certain of differences between them. So basically, as we know, the interest-based and profit-sharing models differ significantly in terms of risk sharing, Sharia compliance, and profit determination. So let's look at the first one, risk sharing. Interest-based model side, BSN earn a fixed interest regardless of the borrower's success. So that's placing all the risk on the borrowers only. This is often seen like unfair. So the side of profit-sharing models, both BSN and the borrower share profits and losses, fostering fairness, accountability, and cooperation. So the second differences between them is Sharia compliant aspect. So let's look at the interest-based model. Violate Sharia principle due to the inclusion of usury, which is prohibited in Islam, but the profit-sharing model side fully complies with Sharia law, emphasizing fairness, ethics, and equitable profit allocation, making it suitable for Islamic communities. Last but not least, profit determination. Interest-based model side, bank profits are determined by fixed interest rate, providing certainty to the bank but potentially burdening borrowers only. So it's seen unfair. And the profit sharing model side, bank earning depends on actual project profits with both parties sharing profit or losses, ensuring fairness and shared responsibility. While the interest-based model offers financial stability, it raises ethical concern, particularly in Islam context. In contrast, the profit-sharing models align with Islamic principles, promoting fairness, collaboration, and mutual benefits.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nurul Auni. Today I will be presenting about the benefits of Islamic finance. First, lowering economic inequality. Islamic finance focuses on risk sharing to ensure the fairness, unlike the conventional system. Furthermore, Islamic finance provides equal access to financial service for all, regardless of income. The use of zakat plays a significant role in redistributing wealth and supporting those in need. Second one is simplicity and transparency. Islamic finance operates through straightforward contracts like ijarah and murarabah, which is to avoid usury, riba, and uncertainty, which is warar. Additionally, compliance with Sharia principles and ensured by Sharia boards. This is to build trust and confidence among users. Third is supporting longer-term investment. Islamic finance prioritizes investment with long-term benefits. They are focusing on industries that support the economy and society while avoid harmful sectors like gambling and alcohol. This is to promote economic stability and social responsibility. Fourth is efficient and effective management. Through profit loss sharing agreements, Islamic finance ensure better oversight and financial discipline. The management is supported by Malaysia's legal and governance framework to uphold the professionalism and offer tailored guidance to customers. Next is the recommendation to promote Islamic finance. First, educational campaigns. Islamic finance need to collaborate with university for seminars during academic hours by inviting experts from organizations like IOFI, which is Accounting and Auditing Organization for Islamic Financial Institution, and IFSB, Islamic Financial Service Board. This seminar is to educate the students about the long-term benefits of Islamic finance. Is key to nurturing future advocates. Second one is technology integration. This is to utilize blockchain for secure the transaction and fintech apps for convenient banking service like open accounts and paying zakat. This is to include the educational tools like short video and quizzes in these apps can boost awareness. And third is financial assistance for entrepreneurs. Islamic finance need to provide halal financing options like murabah and mudarabah for small and medium-sized business, and also to offer guidance on tax management and zakat calculation. The last one is digital marketing. This strategy can use SEO, which is search engine optimization, and paid ads to enhance the online visibility. We can use social media like Instagram or TikTok to share success stories and offer online consultation to build credibility and trust. In conclusion, Islam forbids usury, which is riba, as it contradicts the principles of justice. Unlike the conventional system, Islamic finance offers fair and ethical solutions through models like murabaha and tawarruk. This is to fulfill the customer needs in line with Sharia principles. By promoting Islamic finance, we can raise awareness of its benefits, support social justice, and drive economic development, ultimately contributing to a better and more equitable society. Okay, that is all from us. Thank you for listening.